CF Benchmarks.
One recent event that I would kind of like to get your take on to hear some what the sentiment is over there is the October 10th liquidation that we had, where we had the big drawdown. I remember I was watching that at 5 o'clock, 5 o'clock on a Friday. Everybody's away from their desk.
Yeah, I think there was a widely reported that drawdown could qualify as the largest liquidation event in history. It seemed to come mostly from an aggregator called CoinGlass, but I have no reason to doubt that. And it was certainly a higher standard deviation move than the tariff-related moves we saw in April. Yeah. Just thinking about the aftermath of that, really good theme raised by Mark and yourself. The impression that I get from issuers and other institutional participants is that although, of course, it's not necessarily a welcome event, it doesn't necessarily change the narrative of this is something we're continuing to build. We are still moving towards greater adoption. What is your view on that?
Yes, I think this won't affect the direction that we are heading to. But I think this is some sort of like a real life stress test to the industry. So I think because right now we are in the phase of seeing the increasing institutional participation, I think going forward, I would expect more like a rational market.
Yeah, you'll get that by default.
Yes, right now it's still like the retail investor dominate. Yeah,
exactly.
And on the point of that being a stress test too, I think that's great because we're moving towards 24-hour, 5-day-a-week equity trading here in the U.S. and eventually could be moving towards 24/7 trading.
Yes.
And just that, it's a great example for markets to look at what went wrong, how did we handle the stress, and what can we build on and improve for going forward to get to a 24/7 world where we're trading all the time.
I think it's the same. We experience the same for all of this type of like a new asset class before. So I see it's quite a normal situation if you're taking into a
absolutely
long time.
And in terms of drawdowns, it nowhere near qualifies as the worst we've seen in this this market. So
we always advise like investors that before they invest, they need to understand the risk. So I think this is also a good case for them to understand whether they feel they are comfortable for investing in such kind of assets, because it's not always like an asset class is good for everybody. So everyone has to find something that's appropriate for them.
Perfect. You're listening to CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance, brought to you by CF Benchmarks, the world's largest crypto index provider. Hey everybody, thanks for joining us for another episode of CFB Talks Digital Assets. I'm Ken O'Deleger, and today I'm joined by my colleague Mark Pilipchuk, who's our research analyst. Hi there, Mark.
Hey Ken, great to be here.
Today we are super excited because we have as our guest for the first time a client who is based in Hong Kong, who's actually an investment management client. And this is the first time it's happened. He is Mr. Kenny Khuong, who is the Chief Investment Officer of MicroBit Capital Management. Kenny, we so appreciate you joining us today.
Hi, Ken. Hi, Mark. Thanks for having me today. Yeah, it's my honor.
Wonderful.
To be the first.
Thank you.
First guy on your episode.
Wonderful. MicroBit Capital Management launched in August their MicroBit Spot Ether and MicroBit Spot Bitcoin ETFs. That was in the 21st of August. And incidentally, it's worth noting that these new vehicles have rapidly gathered assets. I looked at the MicroBit Spot Bitcoin ETF a few days ago, and it was already $230 million US from a standing start, on a reasonably, on a sort of like an average, seed funding. So that's a really big move. And, I was discussing with my colleagues, and maybe Kenny will agree, it looks like it could actually take the place of the biggest, or certainly the fastest growing spot Bitcoin ETF in Hong Kong. I mean, Kenny, I'm sure you're very pleased with that so far. Just
Yes. Actually, our AUM grows to for our Bitcoin ETF is quite close to like 250 million.
That's amazing.
As of today, I think it's the entire team effort, and also our clients support us. And I think this is just the beginning of MicroBit as well as our 2 ETFs. Of course, we will keep working and continue to offer the best products to our investors.
Brilliant. So obviously, guys, we're going to talk about the Bitcoin ETF. We're going to talk about the Ether ETF. But again, because this is our first time that we've had the opportunity to have in the studio with us a CIO of a Hong Kong-based ETF issuer, we are going to basically try and get as much of a vibe of the entire space as well. So just a little bit to get things going, Kenny. Let's talk about MicroBit Capital. Clearly, you're launching in the sort of the shadow of the big launches that we mentioned in the a little earlier in April 2024. How does MicroBit Capital position itself in the Hong Kong market in order that it stands out? Clearly, it does stand out. So, what is your formula for this?
I think it's quite different. First of all, it's our positioning. We are a crypto asset focused manager. I think there are only few or maybe not even someone position themselves on this. So and I think most importantly is we set our mission quite clear, is that we always try to empower our investors to allocate their assets seamlessly between traditional and virtual assets. So we keep on offering them products with innovative investment strategies. That's our business mission. And I think this sets us apart different from the other peers in Hong Kong.
It's clear. You're absolutely right. And we look across the gamut of other issuers in this space. And, there's a lot of traditional names that, they've got a lot of obviously clout, and, they're established, they're safe, they're reassuring. But on the other hand, they are established. So therefore, one expects that they will not necessarily have the same cultural imperatives when they're trying to bring these assets to clients. I guess that in a way that's one way that you might differ. If you could elaborate on that.
As a crypto asset manager, as you all understand that the crypto industry is continuously evolving. So there are new functionality, even new protocols, new projects going on. So as a manager focused on this area, we always stay ahead, I think, in terms of the knowledge of what's happening in the market. So that's why when, as you know, like a 24/7 operation, which is a critical feature of cryptocurrency, and to be in the head of the learning curve or in the knowledge space, which allows the investors, we keep on offering investors the best products available in the market. So that's we are always reminding ourselves that we always want to achieve. So I think over the period, investors will feel the difference between MicroBit and other peers.
Yeah, absolutely.
So when it comes to offering investors some of the best products and access through ETFs have been a great way to do that. I'd just like for you to get into kind of some of the mechanics of MicroBit's ETF. How are the custody, the trading, and as well as things like in-kind creation and redemption as well. Can you kind of just walk us through the process there?
Maybe let me introduce a little bit about our 2 ETFs.
Yes,
we have 2 ETFs. Both are spot ETFs, so that means the underlying are invested directly into either Bitcoin or Ether. So because it's only except holding a little bit of cash to pay for some expenses, we all invested into respective cryptocurrencies. So which allows us to keep track of the performance of the respective cryptocurrencies closely. So that's one thing. Because of the underlying being a cryptocurrency itself, it's not going through like in the form of futures or some derivatives, which allows us to accept in-kind subscription or even in-kind redemption. So investors who holds like a fiat money or Bitcoin or Ether can subscribe the respective crypto ETF. So I think this is quite an important feature for the spot ETF because it allows sort of like an integration between cryptocurrencies and the traditional finance. So someone who is from the crypto world, they are holding some cryptocurrencies, they can convert it into some sort of like a traditional financial products. So I think this is the key of our two ETFs.
Yeah, and that in-kind creation redemption, specifically bringing the crypto natives into traditional finance, has been pretty popular here because we just got in-kind creation redemption in the U.S. a couple of months ago, and we've already seen about three-ish. I saw reports saying $3 billion of that has been done, just taking Bitcoin and creating ETF units. How popular is the in-kind create redeem on your funds?
Right now, it's quite popular in terms of our fund. From quite a, I think it's a significant proportion is coming from in-kind creation. But of course, we also got some like traditional like investors who also want to gain some exposure through investing in our ETFs.
Just on that, Kenny, I suspect, correct me if I'm wrong, that there might be some cultural, characteristics coming in here. In the Hong Kong ETF market, do investors generally look to, do they generally sort of like veer towards cash? Or do they actually look for the asset? In other words, is the cultural practice of redeeming assets where it's appropriate, of course, like for instance, I don't know, commodities, I guess. Is that practice kind of like deeply ingrained, or do generally investors look to gain sort of like pure exposure in terms of the actual cash value? Because that could obviously have an
Well, I
impact
think
on.
it quite depends on the investor
Yeah.
themselves, because some are quite like feel comfortable for someone coming from the crypto world, so they are feel more comfortable in taking Bitcoin or Ether. But I think for some traditional investors, mostly they are talking about like taking the in the form of fiat. But of
Yeah.
course, when they redeem in the form of cash, normally it will create some sort of like a conversion from the cryptocurrencies itself. Maybe someone who wants to like preserve the value, then they might want to just take the cryptocurrency.
Yeah.
If they feel
That's
comfortable. Yeah.
really
It's
interesting.
interesting, yeah.
And we're obviously kind of maybe a bit too interested in this subject because it just, as Mark said, it just became possible to do that in the States just literally like a month ago or something like that. The other thing I wanted to ask, because the rules are structured in the United States under the SEC, rules, such that if an individual investor seeks to try to gain access to their in-kind exposure, how much they've bought on the ETF, I think it's very difficult, if not impossible. Now, is that the same in Hong Kong, or can an individual investor actually gain the sort of in-kind exposure that they're
Yes.
Oh, right, wow,
Yes,
interesting.
even individuals
Right, okay,
can make use of this like distinctive feature of the crypto spot ETF.
that's brilliant.
Wow.
That's brilliant. So yeah, that's wonderful facility to have. So just tell us a little bit more about, the timeline for MicroBit Capital and these assets, Kenny. As we mentioned, that the industry, the sort of institutional side of the industry with products, ETFs in particular, really got going in April 2024. I think I'm getting that right. Could be March or April 2024 when those ETFs were launched. Now that was over a year ago.
Yes.
We know that you guys are highly astute individuals, highly, astute professionals. I know yourself, you are. I looked at your CV, if you don't mind me saying so. You've been in the space for traditional assets as well as crypto assets for a long time. So I'm intrigued about the timing as to why MicroBit decided to launch these ETFs now.
I think it's quite different. As you mentioned, the first batch, they are coming like back in early 2024. But even after, like, I think we are just entering the market in the right time, to be honest, because like I think the entire like 2024, the whole year, like actually the market gets educated a lot more. And especially like in 2025, we see more like regulations coming in, which like sets the clear directions for the market. So this also that's why we see like there are like increasing institutional participation.
Absolutely.
And I think when the demand comes in, we are right there to capture the demand. So I think we are in just a very good timing, to be honest.
No, I think you're right. I mean, you basically, you've come in, the others are there, but there's kind of like, there was a little bit of a period of, I wouldn't say stasis as such, but certainly, consolidation and slower growth than perhaps many would have liked. You coming in at this right time when the market was ready to gain some momentum. Obviously, we've had the correction in recent weeks, but you certainly have all those gains from the time when you joined. Okay, let's dig a little bit deeper into these ETFs now, because as we say, we are so curious about how the market works in Hong Kong. There's so many intriguing facilities in Hong Kong which do not appear to be available, certainly not in the UK. And I think the US is actually just getting on board with some of them now. So let's talk about the components of the participants within a production of an ETF. And the virtual asset sub-custodian, that kind of speaks for itself, but if you could have a brief explanation of what that is.
Oh, okay. As you know that our spot ETF, the underlying is of course the cryptocurrency itself. So we need someone to take care of the custody of the assets.
Right.
So this is where the virtual asset sub-custodian like being responsible for. And
makes
because
sense.
they are in full compliant like of all the like the regulators requirements. So that's why we are being comfortable like in having the ETF assets being safeguarded by them.
And then we also have, I think you might need to help me with the meaning of this abbreviation. I think is it the virtual asset trading provider, VATP? What again?
Virtual asset trading platform.
Platform. Now
Yes.
we don't have that as far as I'm aware, or anything analogous to that in the US. If you could explain the purpose of that function as well.
Okay. Please. It's like a crypto exchange. Yeah, but in Hong Kong, because for crypto exchange, in order to be regulated, you need to comply with all the requirements of the regulators. So our ETF only works with regulated VATP. So that's why even when we are trading, when we got some like a creation, we need to buy more cryptocurrencies. We go through the VATP to trade.
Perfect.
So to make sure we are in full compliance with the regulators.
And it would be the authorized participant who transacts on the VATP, or
no, actually,
market makers, all that.
Market maker, yes, but the market maker is quite different. If we are talking about the market maker for our ETF, we are talking about the Hong Kong Stock Exchange. So it's it's about
there you go.
equities or these
there
like
you go. Of course,
exchange listed products. But for VATP, it's about the cryptocurrencies.
The actual asset itself.
Yeah.
Perfect.
I guess the next kind of component working our way down the list of one of these ETFs is, of course, the benchmark. And we're partnered with you there with the BRRAP. But I'd just like you to kind of talk about the MicroBit's decision to choose CF Benchmarks as a benchmark administrator and kind of how that's viewed over in Hong Kong.
Oh, okay. Of course, like we have picked the two indices provided by CF Benchmark, because like as Ken already mentioned, before we are working on this ETF projects, they are already the first batch already in the market. And we found that, I think the market accepted quite well about the benchmark. They provide some sort of like consistency and reliability to investors in terms of benchmarking the performance. So that's why I think it's a no-brainer for us to pick the benchmark.
And then another pretty popular piece of it too has been the whole liquidity complex surrounding it, where we have the CME futures benchmarked to the same reference rate. And that's really enabled a lot of basis trading activity here in the US. Are you seeing any basis activity, or is that popular over in Hong Kong too? So are you seeing kind of similar activity with people arbitraging the futures basis on Bitcoin and Ether in Hong Kong as we're seeing in the US?
I think it's maybe for some individuals or some I don't know, maybe for some unregulated managers, they might doing something. But for a regulated managers like us, because we only conduct our investment activities on regulated exchanges, so that's why I think it's not as liquid as some other people might think, to be honest, at this juncture. But we see that it is improving.
Okay, and let's talk about the Ether ETF, because the Ether ETF provides access to staking, which again is a massive topic here.
Yeah,
I should say in the US, because clearly this is another thing which I don't think is quite exists actually in full form in the US right now. There's a few for 1940 Act ETFs. It's one 1940 Act ETF, well, a couple that provides it, but there's no 1933 Act ETFs that actually have finally started.
I see there are very few.
Grayscale, I think it's going to be the first, but that I'm not, as far as I'm aware, they haven't quite pulled the trigger on that. So tell us, how does staking work for this MicroBit Ether Spot ETF? How does it work in general?
First of all, I need to let you know that we are allowed to stake up to 30% of the Ether that we are holding. So there's a ratio there. And we do the staking through our VATP. So from there, we delegate and are willing to lock up our Ether, in the multiples of 32, to take part in the staking. So regularly, we will receive the rewards from the staking by supporting the ecosystem, all these validating. And the rewards will be in the form of Ether, which adds value to our ETFs.
And when the rewards come in on your ETFs, are you paying those out as dividends, or are you compounding that in with the existing Ether? What are the mechanics?
We remain in our ETF, so without distributing to the investors.
Okay.
And you're fully aware, I know, Kenny, of the network conditions at the moment for Ether. I know it's different for Sol, which we're not talking about, but for Ether, it's very, very specific. And I think the unbonding period has been at various times for the last month or so, as long as I think 16 days seems to stick in my mind. I might be exaggerating that, but that clearly has an impact on the amount that validated behavior and also ultimate investor behavior. I guess your staking mandate is dynamic, and it responds to how the network conditions are behaving. If you can give us a bit of color in general about how that works.
Yes, because you know that I think the queue, especially the unstaking queue, takes quite long. Currently, it's around over 40 days.
Oh, yeah. And, so it's huge.
And for queuing up for staking, it's around over 20 days recently. It's also quite a traffic there. I think because of the incident happened in September. So because there's a provider being hacked. So
so I guess during time because we know network conditions are fluid, they can change. They will change over time. They're not going to be like this all the time, and they're not going to be they could be similar.
Actually,
to
this it's more similar to some of the a blockchain traffic. There's always some peak moments and some low
moments. Exactly. So I guess during those conditions like now, although the stipulation is 30% from the regulator, I mean, I guess as a provider, you would not necessarily be seeking to stake that full 30% under conditions like this.
We try to set it as high as possible to close to 30% in order to generate to maximize the return for our investors. But of course, at the same time, we need to aware of the liquidity to avoid some like a passive breach of this like a this cap. So that's why we are very close to this, but not like exactly 30%.
Yeah.
Yep. And when it comes to taxes around staking, what are the tax implications for when you're
good question.
rolling
in
everything
Hong Kong,
in
because
Hong Kong?
there are no such kind of like a capital gain tax. So
okay.
it's not an issue. So
I
it's
need to move to
wow,
Hong
okay.
Kong. I need to move to Hong Kong.
All the returns, all these are going to the investors.
Perfect.
Yep.
Is that just for staking, or I mean,
even for buying and selling?
Oh wow! Oh wow! Okay.
Yeah, that's much simpler than here, because that's one of the debates with getting staking into the ETF is how do we handle the taxes?
So easy.
Simple tax
I think that's a bit of advice for the IRS there.
Yeah.
Okay, that's brilliant, actually. And in general, just in terms of the end user or end investor side, what is your impression of the understanding of the end investor of the staking facility, the ability to stake, and the attitude, if you like? What is your just give me some color on that, Kenny?
I think this is something new to investors, definitely. But I think over the time, then we keep on like educate the market through like different like public events or some investor educations on our like a media, like even for our website. So I think this is something that takes some time. But I think, I think we are seeing some like positive signs.
Yeah, because it's very new. It's very new. Staking, it has some similarities to other types of activity, but it's totally brand new. Really,
But it's
really
always good that have some new things to talk about, and for investors to learn about the how's the cryptocurrency works. That's always we always advise them like before you invest, you need to understand what you are investing in.
Yep. And then also on staking too, another thing that's been a topic of debate here in the U.S. is the liquid staking tokens and ETFs. We pretty recently declared them not to be securities.
Especially the incident, right?
Yeah, I know. That's what I'd like to get your take on. Is it, as an asset manager, would that protocol risk be something that's acceptable to you, or would liquid staking be kind of off the table?
I think it's always good to have like I think some like extra options for as a asset manager. It's just like a tools, like how well you can manage it.
Yep.
But of course, whenever you use these type of tools, you need to understand the risk behind.
Yeah.
But for us, we are not using liquid staking.
No.
Yeah.
It's not our
I mean,
issue.
if I could get you to speculate, I mean, I hope that it's okay, because my understanding is that at the moment there is one generation of the first generation of staking that is permitted. That is what the sort of regulations are aimed at. Now, in terms of liquid staking, it looks like around the world, all securities regulators are looking at it, and in time, it looks like they will seek to, maybe bring that online. That is something that you're actually quite enthusiastic about, or what is your attitude to it in general? I know you've said that you think it's great for investors to have an additional sort of tool at their disposal, but a bit more on that, if you don't mind.
Oh, okay. Right now, you just mentioned the traditional type of like staking having like a suffering from the long queue.
Yeah.
So having an alternative, of course, will bring some like flexibility in terms of our portfolio management. But as I mentioned again, like but you need to consider or look into the liquidity issue of our own ETF. So I think this is the liquidity risk we always need to manage. So whenever I think the liquid staking helps on some liquidity issues in terms of the traditional staking, but at the same time, it creates some other risk. So that I think the asset manager needs to consider like thoroughly before like adopting this type of like functions or services.
Yeah. just real curious. I'm broadening out the conversation a little bit, Kenny, to look at the market and specifically the participants in the market. It's kind of interesting to understand or get your take on where demand is coming from, types of participants, and what is a dominant type of participant. Now, clearly, you have the issues like yourselves. You also have institutions, wealth management institutions, obviously banks, and then of course we have the retail. Where do you see the sort of main momentum for adoption of ETFs coming from?
I think it's for sure is if you want to, as an ETF issuer, if you want to grow your AUM, I think it's mainly like contributed by institutional investors.
Yeah.
And I think I see this is where the demand coming from, especially like for some like family offices, they now trying to allocate like a more percentage of their entire portfolio into virtual assets. That's why we consider ETF is a good choice for them to gain the exposure like in a very efficient and secure manner.
And that suggests, in a way, because if you're saying that you're getting open interest from family offices, that is
Yes.
a stage further than in the US, from what we understand. I know it's a different system. There's different cohorts of participants and types of fiduciaries. But the main hurdle in the US, my understanding, and Mark, you can correct me if I'm wrong, is the RIAs, the registered investment advisors. You need to get onto their platforms.
Yes.
They need to onboard their clients, and then that sort of brings a bit of snowballing effect. But if you're saying that the family offices you're getting strong interest from family offices,
Yes.
it suggests in a way there's almost been a leapfrogging of interest, and it's moving
And
apace.
that they are normally quite like a risk adverse.
Yes, I would imagine.
But now you
family
are
offices,
seeing like all the I think in general have an idea that cryptocurrencies or virtual assets is something that you need to allocate a little, at least a certain percentage into. No matter like it all depends on say an investor's like risk appetite. So that they can always like allocate the ideal like percentage they want to allocate. But this is something that they don't want to miss out.
Yeah, absolutely. Now, just another sort of comparison with the States and other sort of jurisdictions like Hong Kong. Obviously, the gradualist approach in the United States around regulation to crypto resulted in a year or a couple of years before the actual spot ETFs were launched last year, a futures crypto ETF complex, which had varying degrees of success. But from what I can see, a lot of those futures ETFs that were launched have reduced assets now, and many of them have actually even gone out of business. But when I look over to Hong Kong, I see that although obviously the spot crypto ETF market is probably double the size of the futures ETF. The futures crypto ETF market is still relatively healthy. So what is your explanation of that? And also, do you sort of like see spot gaining additional dominance eventually, and maybe even making the future side redundant, which is effectively what's happening in other jurisdictions?
I think like a spot ETF like is simplest way for investors to gain exposure. And it track the performance of the respective like cryptocurrencies more closely than the futures. And also, we always need to roll over for investments in future. So normally, like for CMEs, they need like a monthly rollover. Then the cost will be relatively higher. Because for us, we simply like mostly buy and hold. But for them, every at least regularly, they need to like roll over. That creates more costs and more management effort. And that's why you see in general like those ETFs charging clients higher management fee as well.
Yeah. And it's really been the roll down's been a pretty big drag on returns too, right? With how big the basis is.
Yeah.
So that's why I think in long term, if for investors who simply wants to gain exposure in Bitcoin or Ether, spot ETF is a better choice.
Yeah, I mean, I'm also curious about why do people still obviously there's people who invested with that first for whatever reason, but there's got to be some people who are still actually freshly investing in the futures ones. What are they getting out of it that we don't see as attractive?
I think maybe they are still not being confident or of the risk of being hacked. I'm not sure because
interesting.
Yeah, of course, if you're holding cryptocurrencies, there are a chance of like being hacked. But for futures, you're mainly facing the counterparty risk.
Yeah. Okay, that's really interesting.
But I think with all these like requirements, I think still spot ETF stand out like as compared directly to futures. Not to mention that's the in-kind subscription and redemption features, which only offers like by spot ETF.
I'd also be interested in seeing kind of with the futures ETFs, like when people are entering and how long the holding periods. Because the only times I can really think it would be better is if the futures were in backwardation and maybe you could make some positive roll return. Or maybe if you're a shorter term trader.
That's already deviate from what's the investor's intention.
Yeah, that is true. Yeah, so so it's really just a niche. It becomes a more niche product.
Simply, if you are like being positive or optimistic about the
then you might as well buy the spot, right?
Of Bitcoin Ether, just simply buy the Bitcoin Spot ETF, Ether Spot ETF. Yeah.
So I guess by implication, yes, the sort of the divergence in performance and the interest and participation, I believe, will increase.
So that's why I always like emphasize that investors need to understand what they are investing.
Yes, and of course, there's the psychological effect of the investors en masse becoming more confident in the space as time goes on, and they're clearly it's well regulated, it's orderly market, it's conventional and it's established. So that again speaks to a gradual demise, in my view. But that's really interesting to know.
We talked a lot about what MicroBit offers today and kind of the state of the market, but I'd like, if you whatever you're willing to share, any of MicroBit's future plans or what's coming up in the next 6 to 12 months for you all.
For sure, like ETF will continue to be our like a key business. We will look to to develop some new ETFs. And at the same time, we also like bear in mind that our mission is to consistently like to facilitate our investors to allocate smoothly between traditional assets and virtual assets. So that's why other than the public funds like ETFs, we also got some other private funds for professional investors. Like which have maybe more like sophisticated strategies. So
and
it's always like that. There's no one product fits all.
Exactly.
And as the market getting more like a complex, investors have different types of demand. We are there to serve the demand.
And again, very tentatively, and to the extent of your comfort talking about it, we know that in Hong Kong soon there'll be novel assets coming to the ETF space. What other assets apart from Ether and Bitcoin, maybe, or the types of protocols, types of digital asset protocols, are you interested in potentially looking at in future? If you can sort of like voice that tentatively.
Of course, like I think the market is expecting some other cryptocurrencies other than Bitcoin and Ether. But to be honest, like for us, I think as a ETF, we always target the major demand. Where's the major demand coming from? And for Bitcoin being the dominant player in the cryptocurrencies, like accounting for like around like 60% of the market cap. And that's one thing. And Ether as well, like more than 10% in terms of the market cap. And it's positioned as the infrastructure of all these like DeFi projects, tokenization, NFT, even stable coins. So I think it's pretty served the majority of the demand of the market. So to us, like I think for investors who are like simply wants to gain some exposure and enjoy the positive cycle of cryptocurrencies, I think this two like ETF already like I think it's some sort of like fulfill their needs already. So of course there are always some other like innovative strategies we are looking into, but I think it's for different type of investors rather than like those who are just simply looking for to take on the upside trend of the cryptocurrencies. It's quite different. Maybe some for like income distribution, income generating. I think we also would like to see the markets like have some more like variety for the investors. And MicroBit also like working quite hard to bring in more products for different type of investors. But right now, if we are talking about simply for those majority, I think our two ETFs already serve the majority of the demand.
Absolutely. And that clearly is evidently the case, looking at the asset gathering speed of it so far.
Yeah.
Brilliant. Well, guys who are watching and listening, that is Kenny Khuong, Chief Investment Officer of MicroBit Capital Management. Kenny, we so appreciate you coming here and providing us with those insights and just knowledge in general, so articulately about the Hong Kong crypto ETF space. Thanks for joining us.
Thank you, Ken. Thank you, Mark.
Yep. Thank you.
Brilliant.
Thanks for listening to another episode of CFB Talks Digital Assets. If you enjoyed that conversation with Kenny, we have our other 50 episodes on Amazon, Apple Podcasts, and anywhere else that you might get your podcasts. Thanks again for listening to another episode of CFB Talks Digital Assets.
Thank you for listening to CFB Talks Digital Assets. This recording is for informational purposes only and should not be considered investment advice. This recording is not intended to persuade or incite you to buy or sell any financial products noted within, including but not limited to exchange-traded funds, mutual funds, equities, other instruments that reference any index provided by CF Benchmarks Limited, or crypto assets. Any commentary, interviews, and discussions are opinions only and should not be considered a personalized recommendation. Please contact your financial advisor or professional before making an investment decision. Note, some of the underlying instruments cited within this recording may be restricted to certain customer categories in certain jurisdictions.